Day, an exciting live stream. I'm so sorry, it has been a while we had this live stream. I've been going through a lot lately. I will still thank God for that. So we are currently on I'm going to make some quick analysis today on gold and other pairs. So we are currently on gold on the 4 hour and the 1 hour time frame. So it is clear that price is pushing up. The overall trend of gold is bullish. That's from the 4 hour perspective. If you scale down to the daily time, if you scale up to the daily time frame, you can see the trend is up. There's no doubt about it. So what we are looking at right now, price is currently breaking this trend line we have drawn. Price is breaking that trend line. But this was the previous higher low that was formed. So unless this level is broken, we are still in an uptrend. Even though price has broken the trend line, we still need this 4 hour candle to close strongly. If this 4 hour candle close below the trend line, then we can start validating this as a true break. Well, as you can see, if you scale down to the 1 hour time frame, you will see that. Let me highlight that for you guys. If you scale down to the 1 hour time frame, you will see this as a break. But what we are waiting for right now is for this 4 hour candle to close strong below the trend line, below this level here. If this 4 hour candle close strongly, that's the only time we'll start anticipating a reversal. But for now, we are not really distracted by this noise on the 1 hour time frame. We are still waiting for a higher time frame candle close to be able to validate the break of this level. Because when you start using these 1 hour candles, as you can see, there is weak rejections. And if you take a sale right now, you identify that price might pull back on you and stop you out before finally going down. So we expect this 4 hour candle to close strong first before we start planning on selling the market back down. So that's the analysis for gold. So let's check on pairs. Let's check on US oil and the pound JPY. So remember on gold, what I said we are waiting for. We are waiting for this 4 hour candle to close strong like this, below the trend line, for us to look for a retest and a continuation down. Let me highlight that with some arrows so that you guys will understand that better. We draw out this level, this previous level that was broken for price make this highs. So that was why we draw out this level. Unless this level is broken, the trend is still up, even though the trend line seems like it has been broken. That's another tip to keep in mind. If you have been taking trade like this, you understand this better. So unless this 4 hour candle close strong below the level, the trend, we are still in an uptrend. We still need this level to be broken. If this 4 hour candle close strong below this level, that's the only time we'll validate that the market trend is changing from being bullish to being bearish. So keep that in mind. So let's check on the US oil. So based on the US oil, this was the level I drew out in the morning. I drew out this level, this resistance area here, because I identified that after the break of this level, we anticipate a pullback for a retest of that level that was broken before we'll get a continuation. So that was why I draw this level, and because of price was trading below this level for a while, and when price has been holding at a level for a while and we finally had a break of that level, there's a high chance price is going to continue up in the opposite direction, because there are many sell or buy orders around the level, and once price break above that level, the buy orders will be triggered and price will continue up. The buyers will step into the market. So that was what happened, and after the break we anticipated a pullback and we got the pullback. This bearish candle was a pullback. If you scale down to the 1 hour time frame, you see the behavior clearly. So this was the pullback. This was a deep pullback. So if you took these trades, then you must have had your stop loss below this level here. You can see you will have a bigger stop loss, but that's trading for you. Nothing is perfect. So even though you were trading in accordance with the trend, but you can see your stop loss placement. This is a deep pullback. Remember, nothing in Forex is perfect. Sometimes you have the pullback might happen around the key level, and sometimes price will push deep into the level, and it might seems like we have a break back into structure, but it's just a deep pullback. And after the deep pullback, the bulls step into the market again and start pushing the market back up. So that's the analysis for gold. And if you are currently not in a buy right now, you should avoid taking any buy, because the market is in a push phase, and any buy you take right now, there's a high probability price is going to pull back before a continuation, because that's how the market moves. After a push phase, after any push phase we get a pullback, then a continuation. So avoid, if you are not currently in a buy right now, avoid taking buys. Wait for price to get back to the level again, to this level, and show you sign of failing to break through scaling down techniques and looking for multiple weak rejections around the area before you can buy the market back up. And avoid selling the market. Remember, the overall trend of the market is up, is bullish. So avoid selling the market. If the market is trending up, focus on taking buys. Focus on looking for buying opportunity. Even though you take a buy and you lose the trade, you still win, because you were trading in accordance with the trend. You are not going to win all of your trades, but never try to trade against the trend. If the trend is up, focus on taking buys, and if the trend is down, focus on selling the market. That's a very important tip to keep in mind. It will save you a lot of capital and equity. Do that. So let's go back to gold. It seems there's a high volume in the market right now. So let's scale down to the 1 hour time frame on gold. So as we said, we are waiting for this 4 hour candle close to close below this level we have drawn. Once this 4 hour candle close below this level, what we expect next is a pullback to the area. After the close, we'll get a pullback to the area for a retest. So after the retest, this is the level we will be taking our sales. But we are not selling the market now. The market is now. Don't let FOMO let you sell the market now. Avoid taking any sales. So we are waiting for this candle to close and to get a pullback before we can get a continuation down. So remember, the previous candle, this 4 hour candle, this 1 hour candle didn't close below the level. It closed in the structure. So unless a candle close, let's say unless this candle close below this level, we are not really quite sure that this level is broken, because what will happen is before this candle close, if you take any sell, price might retrace and only leave a weak rejection like this previous candle. So that is why we need a full body candle to close below the level. So as I said, the market is in a push phase. Avoid taking any sell right now. We need to wait for price to pull back to the area again. Most of our strategy is on price action and break and retest strategy. If you have been following us on this channel, you understand that. So you need to wait for price to get back to the level. Avoid taking any sales right now, because the market is in a push phase and there is high probability price is going to pull back. So do that. Avoid taking sales right now. Wait for price to pull back, and after the pullback, after the pullback, we scale down to our 15 minutes time frame to get early signs of failing to break above, and this is where we are going to be taking our sales. So right now, let me mark the level out for you guys so that you guys will understand it better. So this is the break we are anticipating. After the break of that level, the next phase is the retest. Remember, the market always moves in 3 phases. We have the push phase, the pullback, and the continuation. So after this break, which we indicate by this arrow, the next phase we anticipate is. So as I was saying, this arrow means the break we are still anticipating. We are anticipating this 4-hour candle to close like this below this level we have drawn. So unless this 4-hour candle close strong below this level, the trend is still up. I'm still repeating myself. You should keep that in mind. Unless this 4-hour candle close like this, full body candle below this level, that's the only time that the trend is changing. Because if this 4-hour candle retrace it move and leave a weak rejection and close above the level, then we are still in an uptrend. So you should avoid taking any sell right now. As I said, we are waiting for this close first, and after the close, the next phase is the pullback, which is this arrow. So this arrow is a pullback we are anticipating. This arrow is the break we expect, and after the break, the next phase will be the pullback, and this is where we will need to be entering our sales. So you can actually, if you are not going to be on your chart, you can set a sell stop order around the level. Set a sell stop order around the level with your stop loss. So once you set your sell stop, that's if you are not going to be on your chart. But if you are going to be on your chart and monitor the trades, then you should wait for price to pull back. Then after the pullback, I said this is where we need to be entering our sales. So after the pullback, the last phase will be the continuation. Last phase will be the continuation back down to some of these levels. Sorry about that. Okay, this is a break we expect. After the break, the next phase will be the pullback, and this is when we need to be entering our sales at this level for a continuation back down. So that's how I approach our gold. As I said, the market is in a push phase right now. Avoid selling the market. Don't let FOMO get the best of you. The market is going to pull back. So if you're not in the sell already, don't get afraid or impulsive and start selling the market, because any sell you take now, you are going to lose it, because the market will surely pull back to this level. And unless your stop loss is above stop loss above the level, imagine taking a sell around the key level here. Just imagine your stop loss range, you might have a 3 pip stop loss. And the beauty of this is you have a more smaller and safer stop loss. So that is why you need to wait for price to pull back. The market will pull back because these are some of the patterns, and yeah, these are some of the patterns that repeat themselves daily, always on the charts. So the market will surely pull back. So don't be anxious in selling now. The market is in a push phase. Wait for the pullback to happen. Remember, trading is 90% waiting and planning, and only 10% execution of your trades. So be patient enough. Patience is key in this business. You need patience. So try to be patient and wait for price to pull back to the level again before we can sell the market. But right now, we are not doing anything. Don't worry about the price pushing down. Don't worry about that. If you are not in the trade already, avoid taking sales. Avoid taking sales for now. The market is in a push phase. So as we wait, let's check on the pound JPY pair and make a quick analysis on that. For those of us that trade the pound JPY, up, the trend is up. There's no doubt about that. The trend is clearly up. And what we'll start identifying on pound JPY, we can see multiple week rejections. We can identify multiple week rejection here. Price is moving sideways. Price is not breaking up or below. So price is consolidating. Let's say there's a tug of war in the market. The buyers and the sellers are sitting around this level. So we expect a break below or above. But I'm not going to be trading this. I'll be waiting for more information on that before I can trade the pound JPY. But for US oil, as I said, based on the analysis, the trend is up. If you are not currently in the buy already, it's either you wait for price to pull back to the level again to create what we identify as a double bottom to buy the market back up, because the market is in a push phase right now. And the one thing you don't need to be doing is taking your trades in a push phase when the market is pushing, it's in a push phase, because there's high chance you will lose that trade and it's a low probability trade. So for US oil, as I said, the overall trend on the 4-hour time frame is up. Price broke this level. It has been holding for a while. This 4-hour level, price broke the level by this 4-hour candle here, and we currently had the pullback, a deep pullback continuation of the overall trend, which is up. So if you're not in the buy, avoid taking any buys. The only thing you can do here is you can mark out this level like this, the higher high that was formed. So you can mark out this level like this and price to break this level. Once price break the level, you wait for a pullback to get a continuation up. So you need patience. Or once price start getting to the level and we'll start seeing multiple week rejection or failure to break, that's the only time we can start anticipating a reversal or selling the market back down. But the trend is up. We are not going to be trading against the trend. We are only going to be looking for buying opportunity on US oil. So either wait for price to pull back to create a double bottom pattern around this level, or we want a clean break above this level to get a continuation. So that's how we approach the US oil. So let's go back on gold. So gold is still in a push phase. As I said, we are waiting for a pullback to the level to get a retest of that level before we can sell the market. So this is a high probability trade. If price pull back to this level, let me use the 4-hour. If price pull back to this level and take your sales around this level, this is a high probability trade, because your chances of winning increases dramatically and you have a more smaller stop loss. So as I said, we are waiting for pullback on gold. Let me clear out some of this. So if you are currently on the live stream, you can do yourself the favor and screenshot the chart, screenshot the analysis, screenshot it. So avoid chasing the market. Make your analysis, have your plan, and wait for your plan to play out. That's professional trading. We don't chase the market, we wait for the market to come to us. So that's what we do. Don't let FOMO get the best of you. So that's a quick analysis.